$60 billion for a spice rack. Unilever buying McCormick is the most expensive pantry restock I have ever seen.
It's just a rumor, Nate. I care way more about Apollo dropping $10 billion to buy Atlantic Aviation from KKR.
Private jets? Oh, come on. That's just billionaires trading toys. This spice monopoly is the real story.
Only if the math works. The only real math we have today is Sysco dropping $29 billion on wholesale hot dogs. The rundown: $29 billion for Jetro Restaurant Depot. Sysco is clearly not playing around.
I love this deal. They're basically buying the Costco of the restaurant world. Analysts are saying it juices EBITDA by 45% right out of the gate.
Wait, I read the release. They're claiming a 55% boost to free cash flow. But if you look at the integration costs, I highly doubt they hit that in year one. It's a classic banker overpromise.
Oh, come on, it's a transformative play. You get wholesale dominance overnight. You always pay a premium for that kind of market share.
Fine, I'll give you the scale argument, but I need to see the quarterly filings before I buy the 55% narrative. Speaking of massive premiums, how about Eli Lilly paying up to $47 a share for Centessa?
47% rally on the news. The biotech buyout machine is just a money printer right now.
It's wild. I'm watching the tape tomorrow to see if a competing bid drops, but Lilly usually locks these things up tight.
Let's pivot to wealth management for a second. Carlyle is taking a majority stake in MAI Capital, valuing the firm at over $2.8 billion.
Private equity buying RIAs is the new tech gold rush. Recurring revenue, incredibly sticky clients. It makes total sense.
Speaking of private equity shuffling the deck, did you see the Apollo news? $10 billion for Atlantic Aviation, buying it straight from KKR.
Selling a private jet services company to another mega fund. Just billionaires trading toys with other billionaires.
Hey, those private terminals print cash. Have you ever bought a gallon of jet fuel at Teterboro? It's basically liquid gold.
I can't say I've had the pleasure, Nate. I usually fly in coach.
Your loss? Look, before we move on, I have to bring up the whisper of the day. Wall Street is talking about a $60 billion mega merger.
Don't tell me it's the spice one.
Unilever and McCormick. Imagine the scale. Hellmann's mayonnaise and Old Bay seasoning finally under one roof.
A $60 billion spice rumor is exactly the kind of unverified gossip you love. I need to see a term sheet before I care about mayonnaise synergies.
You'll care when they start combining the supply chains, but hold that thought on giant acquisitions. Because Corebridge Financial just dropped a $22 billion bomb on the insurance sector with Equitable. The big one.
$29 billion for wholesale bulk food. I just keep staring at that number.
Sysco is not messing around. Buying Jetro Restaurant Depot for $29 billion is the definition of a transformative play. You own the delivery routes, and now you own the cash and carry warehouses where the food truck guys buy their giant tubs of mayonnaise.
I get the monopoly light strategy. What I don't get is this press release claiming it will immediately juice EBITDA by 45%.
The synergies are right there, Maya.
Synergies is just banker speak for firing middle management and hoping the supply chain doesn't break. A 55% boost to free cash flow? Show me the math. Jetro runs a completely different warehouse model than Sysco's delivery network.
You're missing the forest for the spreadsheets. Sysco just bought absolute wholesale dominance. If you serve food in North America, you're paying Sysco. It's a brilliant defensive move.
It's an incredibly expensive defensive move. Look at the pharma space today. Eli Lilly is buying Centessa for $47 a share. That triggered a 47% rally in the stock. That makes sense to me. That's a targeted premium for a specific drug pipeline. Sysco dropping $29 billion on warehouses just feels heavy. I give it 2 quarters before they quietly write down some of those integration costs in a Friday afternoon footnote.
Spoken like a true skeptic. But while you're hunting for footnotes, I'm looking at the ultimate game: voices.
I'm looking at the analyst notes on this Sysco and Jetro deal, and I feel like I'm reading science fiction.
Oh, the sell side is absolutely euphoric today.
Euphoric is a polite word for it. Listen to this one. They're calling a $29 billion wholesale food buyout a, quote, transformative play that will immediately juice EBITDA by 45%. Juice!
Come on, it is transformative. Sysco is swallowing Jetro Restaurant Depot whole. That's wholesale dominance on a silver platter. You get a 55% boost in free cash flow right out of the gate. The math actually works on this one.
Nate, you're sounding like a pitch deck again. Immediately juice EBITDA? Have you ever seen a $29 billion integration happen immediately? The supply chain overlap alone is going to take 3 years to untangle.
You're underestimating the pricing power here. When you control that much of the restaurant supply market, you dictate terms. The EBITDA bump is real because the margin expansion is real.
I'll believe it when I see it in a 10K, not a hype memo.
Fine, be a skeptic. But speaking of shifting margins, look at what Count is doing with Oracle Group.
Right, and just to clarify for everyone, this is Oracle Group, the Australian wealth manager, not Larry Ellison's Oracle.
Could you imagine? $72.2 million for Larry's company. He spends that on yacht maintenance.
Exactly, but it's a smart little bolt-on. They're projecting it aggressively pushes their wealth segment's EBITDA contribution from 46% to almost 60%.
It's a classic roll-up strategy. Quiet, effective, no supply chain nightmares for you to worry about.
Very funny. But if you want something loud, wait until you hear the whisper number on this Unilever and McCormick rumor.
$60 billion to build a global spice empire. We need to talk about that next. Spill the tea. $60 billion for mayonnaise and garlic powder. Tell me I'm not the only one staring blankly at this Unilever and McCormick rumor.
You're definitely not. The Wall Street whisper mill is working overtime today. But honestly, I hate this idea. Why does the company making Dove soap need to own Old Bay seasoning?
Because consumer staples are terrified right now. It's a pure defensive play. You bolt McCormick onto Unilever, you get an absolute fortress in the grocery aisles. The pricing power alone is beautiful. You know, I love a good shelf space monopoly.
Beautiful for who? The bankers collecting the advisory fees? Look at the underlying data. Buying McCormick at a $60 billion valuation is just Unilever admitting they have zero organic growth left. It's a desperate reach masquerading as a strategic mega merger.
Oh, come on, desperate? It's a masterclass in scale. You get global distribution networks overlapping. Plus, think of the synergy. Axe body spray, now in pumpkin spice.
Please never say that again. I'm actually much more interested in what Mondelez is doing in the shadows right now while everyone else is gossiping about spices.
The GetLink play.
Exactly. Everyone's distracted and Mondelez is quietly creeping up the GetLink cap table. They just secured a 3.5% stake up front.
Just a tiny little appetizer.
Right. But they're sitting on their hands waiting for regulatory approval for another 6%. It's a classic stealth maneuver. Park the small stake now, lock in the pricing, and wait out the regulators before anyone realizes you're taking over the room.
See, that's the kind of aggressive cap table maneuvering I used to live for. Get your foot in the door before the market wakes up. Speaking of aggressive moves, we need to talk about two private equity titans trading a $10 billion toy. Tomorrow's radar. I need to address the $60 billion elephant in the spice aisle. Unilever and McCormick.
Oh, come on. You don't actually believe that whisper.
Why not? Unilever wants total dominance of the grocery cart.
Nate, look at the antitrust environment. You think regulators are just going to let them monopolize flavor? It's a banker's fever dream.
A very lucrative fever dream. Fine. What's actually on your radar for tomorrow?
The regulatory wires. Mondelez is waiting on approval for that extra 6% stake in GetLink, and I'm staring at Centessa.
Right. Eli Lilly floated that $47 a share offer.
Exactly. The stock rallied 47% today. The market is practically screaming that a competing bid is coming.
Or day traders just figured out how to spell Centessa.
I'll bet you a steak dinner we see a counteroffer by Friday.
Make it a dry-aged ribeye and you're on. We'll see who's paying on the next Deal Street Daily.